You've probably heard of terms such as fractional reserve banking, inflation, deposits. But what do they actually mean? And how do they play a role in the function of our banks? Let's break it down step by step. First, let's talk about deposits. When you deposit money into a bank, you're essentially lending your money to the bank. In return, the bank keeps your money safe and often pays you interest. But what does the bank do with your money while it's there? Banks use the money deposited by customers to issue loans to other individuals and businesses. This process is called financial intermediation. The interest they charge on these loans is higher than the interest they pay you on your deposit. And this is one way banks make a profit. Another way banks make a profit is by essentially inventing more money using a system called fractional reserve banking. This system states that every time someone makes a deposit into a bank, the bank legally have to hold on to a percentage of that money. They can't just lend all of it out like crazy. This is so that if a depositor decides to make a withdrawal, the bank actually has some cash on them to give out. This figure is usually around 10%, meaning the other 90% is available to be loaned out. So, how does this mean they print money from thin air? Well, let's imagine you deposit $1,000 into the bank. The bank holds on to 100 of those dollars and lends out 900 to the next person who comes in and asks for a loan. This person will then spend that money, handing it over to a third party who then goes and deposits it back in the bank. The bank keeps 90 of the deposited dollars and lends out 810, and the whole process repeats until that initial $1,000 deposit is turned into $10,000, meaning that for every amount of money you deposit into a bank, the bank can make up to 9 times that amount of money from nothing. However, this does not go without consequence. As a result of pumping more and more money into the system, the value of the money decreases. In other words, the purchasing power of money is less. This is called inflation, which, as I'm sure you know, is a continuous problem in the world today and will not be disappearing anytime soon, unfortunately. If you found this video useful, subscribe, and I'll see you in the next one.